So welcome to this event, this Investor Focus Day. Today we will talk to you guys. Well, as you all are aware, we also do have cameras here to talk to the public at home, shareholders, investors, analysts, and the likes. Today's event, we'll be sharing an update on the Q3 report. As you're all aware, this is one of the big days for the reportings going out. It is for us as well. It was released at 8 this morning. After a quick update on the financials, we will be sharing an introduction on EFUEL, our latest acquisition in DIST IT. So yeah, welcome. First off, we'll invite Robert to the stage. He'll take the Q3 and he'll hold it up against the long-term strategy that we presented at the Capital Markets Day in March. So if anyone out there wants to get more information on Aurora, Deltago, Septon, and other companies in the group, I highly recommend that you look into the material that is already out there, because we have tons of it available. So we're going to deep dive quite a lot, not introducing too much of the old content, but actually making sure that we give you guys a thorough update on where we are right now. So first off, it's going to be an update on the Q3 and the financials, and then introducing the acquisition of EFUEL. Secondly, we want you guys to get to know EFUEL a little bit better, taking you through the engine room of EFUEL, sharing the dynamics of the business business model itself, and an outlook on the market. And then finally, we'll have a Q&A session. We hope you guys will be willing to participate with questions. We'll have Rasmus and Robert on stage with me today. So first off, I'd love to present Robert onto the stage. A visionary mind, a business leader that is coming onto the stage as it is already. There you go.
Thank you.
Welcome.
Well, thanks for that, Adrian. I will walk you through our Q3, our strategic plan, an update on that. And also, I will present EFUEL from a DIST IT perspective. We believe that we are tracking on our strategic plan and that EFUEL will add further acceleration. So what have we been doing? We have issued a new bond with a framework of 800 million SEK, which allows us to fulfill our strategic plan. That will give us room to maneuver within the financial planning thereof. We made a strategic acquisition of a winning concept, in a thunderous market, actually. Within Aurora Deltaco and Septon. Aurora Deltaco are two companies in the process of merging and gearing up. Septon is a consolidated group of companies in the process of realizing efficiencies. And for these groups of companies, the main activities are building and growing own brands. It is developing business in Europe and in new market verticals. And it is to build an efficient platform for organic growth and add-on acquisitions within this group. So the key word for this is scalable growth, which we have extensively explained how our thinking is in the Capital Markets Day we held in March. So please have a look into that if you are interested. We are further strengthening our sustainability strategy, and we have hired Mikael Salo from Bonnier, where he has been responsible to develop their sustainability concept. Mikael is actually here in the audience. Hi, Mikael. So Mikael will drive our strategy and its implementation in sustainability. Me and Philip have stepped down from operational roles in Aurora Deltaco to focus and drive our strategy and our capital allocation. And we see 4 funnels for our main funnels for our capital allocation. And one is shareholders, organic growth, add-on acquisitions, and new legs of business. Well, as some of you have seen, we published our Q3 figures this morning, and here are some highlights from that. We see a delayed post-pandemic recovery in the early part of the quarter, but it did pick up as we went through the quarter, finishing well in September. We have had temporary challenges from the increasing freight costs, which we have handled, and we expect to come back on track and on targeted level. We have also seen that our strategy of exports in Europe has gone very well in the quarter, and the own brands strategy is on track. We had the management changes in Aurora del Taco, as I mentioned, where me and Philip has handed over our roles to the management team in Aurora del Taco, and it is a tight ship able to drive the strategy forward. If we look at EFUEL, we have had stronger growth than we expected. We have profitable growth, despite that we still are in the building phase of the service revenues. And it also is early days for the own brands business. We'll talk about that later. We have had a successful integration with DIST IT. You could also say that we have made friends. And we have progress on projects. And I could mention, for example, we have an upgraded homepage, we upgraded app, we have an we have a launch of an upgraded branding. We have launched the roaming service networks for EV charging. It's like a mobile roaming service, but for EV cars. And also we are hiring IT and system integration specialists into EFUEL as well. So let's take a look at the numbers. We have seen in revenue a growth of 11%. And in adjusted EBIT, we say adjusted because we had acquisition costs in the figures. So therefore they are adjusted. The adjusted EBIT growth is 32%. And we see that the gross margin has somewhat suffered, mainly due to increasing freight costs, which will return back on track. Furthermore, we will see recovery and increasing margins from recovering Septon after the pandemic. So that is great, actually. And for you, those of you who are new to us, I can mention that the last 12 months sales and revenue is 2.4 billion SEK, and our market cap is around 1.9 billion SEK. What we can see is that our net debt is 400 million SEK, which is higher than usual. That is mainly because of an inventory buildup of own brands due to growth, and also due to well-known logistical problems in the markets, as most of you are aware. So to summarize it, I would say progress, but it takes time to build a beast. If we take a look at our financial plan, I would like to start with saying that when we did this plan, we had a point of view of the recovery from the pandemic. Yes, but we did not foresee the hike in freight cost, the extent of the hike. So yes, we have addressed that. But other than that, we feel that we are tracking on our plan. And in 2025, we plan to reach 3.5 billion in revenue and an 8% margin, or EBIT margin. And the key word here is scalable growth. And this means that we are building efficient base plates for the legs of business, for organic growth and also add-on acquisitions. And we are focusing on developing and growing our own brands, riding megatrends. That's where this growth will come from. And also developing our sales in Europe, which has gone very well so far, which is a very important for us leading indicator. So, and no, EFUEL is not included in these targets. These are our organic targets as we will present the EFUEL financial targets into our overall plan in our next Capital Markets Day in March. And their contribution, I believe, will be significant. We are working with and are exposed to structural trends. And here we see an example of 3 megatrends: digitalization, electrification, and green tech. And here we see how 3 megatrends converge in like an evolutionary sweet spot. And what do we find there? EFUEL. And it's a good spot to be in, and it also creates a strategic overwatch over the terrain. What's going on in this interesting intersection? So yes, we will go sniffing. If we take a look at DIST IT strategic pillars and relate the fit of EFUEL into that, let us do that. Riding on megatrends in niche categories, we can see that EFUEL is in one of the mothers of megatrends right now. Develop own brands. EFUEL has been doing that to a certain extent, but together with the Aurora del Taco own brands team and sourcing muscles, we can accelerate that. That is great. Own brands into D2C channels. That is part of EFUEL's business concept to also target end customers. Strategic ESG or sustainability focus, well, that is actually the reason for the existence of EFUEL almost. Geographical expansion. We believe that EFUEL's concept will fly on other markets. And moreover, our cooperation with the main supplier allows us to expand geographically, which is a very good thing. Capital allocation. EFUEL's business model is quite efficient, capital efficient. They have a growing share of revenue from end customers with cash payment, and that makes life much easier. So if we take a look at the high-level reasoning around EFUEL from a DIST IT perspective, it's in a very strong megatrend. It has a lion's share of the market in Sweden. There are significant synergy potentials. And let me mention, for example, geographical expansion in the Nordics. We can help out, and we also have contacts in Europe with distributors. and knowledge. And we have also, for example, the cooperation around driving own brands. And we have public tenders where the financial stability and size of DIST IT will help EFUEL to win large and long-term public tenders. There's more. It's a scalable and profitable business, and also scalable financially. It will be an efficient vehicle to accelerate. We have a strategic partnership with one of the world's leading wallbox manufacturers, who really supports us and also allow us to expand geographically. And it also accelerates our sustainability efforts. Thank you.
Thank you, Robert. Thank you so much. So for the next person in line, we're going to see Rasmus Bender. He's going to take on the call in a minute. So he's in a quite challenging and competitive landscape, we would say. It's a fast-moving area, but he has a long career, even though being young. He has a long career working within the energy structure, the power segment, the EV charging specifically. So now we invite Rasmus onto the stage to enlighten us and to share the knowledge on the dynamics of the business. Welcome, Rasmus. Welcome on stage.
Hi, everyone. I'm Rasmus, as you could hear from Adrian. And I was going to start telling you a little bit about myself. I'm the CEO of EFUEL. I've been working with energy and power production, but for almost the recent 6 years, I've been building distribution networks for competitors in the market, product development for other competitors. But over the last 3 years, I've been focusing on building EFUEL, and hopefully for the next 50 years as well. So I'm going to tell a little bit more about who we are. EFUEL is basically a one-stop shop for EV charging. And the foundation of EFUEL was built on the belief that we should make it easy for people to be sustainable by driving electric vehicles. And when I started, I was thinking about how we're going to make it sustainable or easy to be sustainable. Like, true sustainability is to make it easy for everyone to be sustainable. The future is electric, and EFUEL is, I would say, at the forefront. Our goal is to become the number one. Oh, sorry. I'll move back. Our goal is to become the number one EV charging company in Europe. I think it's doable, and I'm going to tell you why. So why is this doable? EFUEL makes EV charging basically easy to charge and charge, meaning we handle both payments and operating services for charging. We started off with building a strong partner network, which is the foundation of EFUEL, basically, with a nationwide installation possibility, with support, because this is somewhat a scary product for most people. It's something you haven't bought before. And as you heard from Robert, we're working with EC, providing the best charging box on the market, alongside with other products that complements the product for installation and so on. We have a long know-how from both solar energy, wind, and the car market. And I think this is something that also attracts both customers and partners. And last but not least, EFUEL services, which consist of an operating service, helping customers to handle both charging and payments for people who want to charge at home, at work, or on the move. EFUEL's business areas can be divided into 2 parts. And to tell you a little bit more about the basic belief is EFUEL should make money on selling, installing, and operating charging. And let me tell you more about where the sales comes from. So we can see that behind me here we have installed through 2021 2,500 chargers for real estate, housing associations and corporations throughout Sweden. And this has been done through our 2,000 partner installers nationwide. This is 15% of our customers. And we've provided 6.6 megawatt hours of car charging. The homeowners are really in the lead, and they are the ones who we've been focusing on the most. They are in the forefront, and they are also taking charge. We've installed over 14,000 chargers throughout Sweden for homeowners. We have a high focus on digital presence, online sales, both to installers and partners, but also directly to consumers. We just recently launched a new website, and this new website has improved both, as you can see, the 150% increase in visitors, but it's constantly increasing, and something we highly focused on. We've provided 37 megawatt, which is a lot, for car charging and travel. As you can see, we are in control of the transition. Altogether, we've installed over 2021 16,500 chargers in Sweden. And I would say that together with our partners, we are electrifying Sweden. Altogether, all these megawatt hours that somebody and somehow not many people know what it actually means, consist of 21 million kilometers of fossil-free travel. So let me tell you a little bit more about the EFUEL solution. So the EFUEL solution actually consists of more than just the charger. It's not only just the charger, it's a solution that actually brings customers at home, at work, and on the move into one. We only work with the best products, and we focus on high-quality products. And the EFUEL solution actually consists of the easy charger, load balancing, which actually means that you have a security on the fuses at your home. But also EFUEL services, which is an application and operating service, nationwide installation, and support. And the reason why I included support here is because it's something that's, as I said before, I need to emphasize on this, because before it was just people who were gadget geeks or early adopters that bought the EFUEL solution. Today, it's people that don't even know what voltage or amperage is who buys into the EFUEL solution. The market is changing, and therefore support is needed. Moreover, I'm going to talk a little bit more about EFUEL services, where we deliver an operating service for people who want to charge at home, at work, or on the move. EFUEL services can be divided into 3 categories. Homeowners, we have an application free of charge with all the smart functions one might need, including control of the charger, handling, scheduling charging to when the energy price is at the lowest. For companies and properties, it's more of an administrative pledge, which includes payments, access to charging, reports, but also enabling property owners or household associations to make money on their parking place. And last but not least, as mentioned before by Robert, the public charging network, which is somewhat a really interesting part, which I'm looking forward to talk more about. And soon to be launched is a roaming network which consists of 250,000 public charging stations throughout Europe. This means we don't only attract people that have bought an EFUEL charger, but also people that want to charge on the move. So what about the market? I think it's safe to say that everybody here knows that EV charging is here to stay. It is the future. EFUEL was founded in Sweden, and it's also our core market. And it's also driving the transition. Even though we're not Norway, we're not far behind. By 2030, we are expected to have 2.6 million electrified cars in Sweden. It means that 50% of the car fleet in Sweden should be electrified by 2030. And today, we hold the third largest share per capita in the world of EVs. Even though Sweden is moving further ahead, and the European market is not far behind. During 2021, 17% of all cars sold in Europe were an EV. And the expected growth between 2021 and 2025 is expected to hit $6.36 billion. It's a compounded annual growth rate of 31%. Behind me, you can see that the area of the map actually shows the highest EV adoption in Europe. The darker the map gets, the higher the EV adoption is. And to the right, you can see the neighboring countries, which we are focusing on for the next wave of expansion. Today, EFUEL is existing in Sweden, where we are looking at Denmark, Finland, and Germany for the next markets. They're our neighbors. If you look at the EFUEL growth potential through the acquisition, we're proud to say that we're really happy to be a part of DIST IT. We have a higher focus on in-house development of products. We've gotten access to new markets and cooperation with overlapping customers. Final but not least, I would say that one of the most important stuff for EFUEL, since it's a young company with young people, is the accelerating growth with cross-organizational expertise and also the financial capacity. This is somewhat what I think everybody's been waiting for, but EFUEL holds an estimated revenue of at least 120 million SEK in 2021, with an EBIT margin of at least 10%. If you're looking at Q3 2020 to Q3 2021, we have increased the revenue growth by 287%. Over the next forthcoming years, excluding the expansion plans, we have forecasted an increase in revenues by 70 to 100%. Thank you so much for listening.
Well, thank you, Rasmus. It was really nice insights on the EV market and how we're going to develop the business therein. And let's switch back to DIST IT perspective. What does all that means, which Rasmus was telling us from a DIST IT perspective, or what do we expect? We expect a continuing revenue growth in Sweden. Sweden is a really good EV market where we have a lion's share, which we plan to keep. And we expect the building of revenue from new markets where we are putting in efforts. We have a base of solid and profitable distribution today. And EFUEL is one of the odd startups which was profitable from the beginning, which is a godsend gift for us because it ensures a very healthy culture within EFUEL, making it really easy to charge ahead with. we will be building revenues from EFUEL services, and we're also building revenues from developing own brand. This is what we expect. So now, when me and Philip have stepped back from operational roles in Aurora del Taco, we spend more time on driving the development of our strategy, capital allocation. So what does that mean? Well, that means that we're looking for the next EFUEL. And DIST IT is a scalable platform which enables acquired companies to accelerate their core business. And what we are looking for is business models which are future-proof within technology. So thank you for now.
That was basically the pre-prepared show. So next up, we have a mic. We hope that you guys are ready to participate in the Q&A session. I, for one, have a couple of questions that I would like to get out from my chest. So to sort of kick it off, we have Morten over here with a mic. I'll be starting with a couple of questions, and then let's see how far it goes. When we run out of time or content or questions, we'll end today's session and send you guys along your way on a fast pace to your weekend. So Robert, the Q3 results, you go through them today. What is your feeling with them? What you got?
Well, I would say, as I said in my summary, it is progress, but it takes time to build a beast. So we're always hoping for better. But the recovery from the pandemic had a slow start in the quarter.
Yeah.
But it picked up pace.
Sure. And you mentioned the global freight situation.
Yes.
What is the dynamics of this situation in China and the global trade?
Well, the signals of or the anticipation that there could be disturbances and problems have been out there for a while, but the dynamics of the freight cost increases and one crisis after the other was surprising to us. So we actually increased prices again and again to our customers, and then to catch up with that. And I think that there is a broad understanding in the market in the dynamics thereof. So I think we are in a balance and we will be back on track.
Sure. Okay. So for the 5-year plan, it seems that there's quite a gap still between the, let's say, the EBIT margins of today and the revenue growth that you're expecting to deliver on. Where are you on the 5-year plan in terms of that tracking?
Yes, we believe we are tracking. We in the 5-year plan we anticipated a recovery from a pandemic, and we also anticipated a gradual and broad acceleration of activities, which is we look at the leading indicators thereof, and one of them is, for example, export to Europe, which is an important driver for that. That is for the organic plan, and now we'll have to up the stakes with EFUEL as well.
So, from the audience, do you feel that the guys have answered all your questions so far? Is there anyone? Yeah, thank you.
Hi, Eric from ABG here. So first off, on the price increases, will they be in full effect for Q4? And what sort of magnitude of price increases could we be seeing?
You asked for if they will be having effect in Q4?
Yeah, full effect for Q4.
Yes, we believe so.
And what sort of magnitude of price increases could we be seeing?
Horrendous. It's a short answer.
Okay, good. And then just a question on own brands as well for the quarter. I mean, a bit weaker than we could have expected at 8% growth. Could you go into what sort of mix happened within the own brands? Which sort of segments within own brands were strong, respectively weak?
Okay, you mean within own brands?
Exactly.
Yeah. You could say that within own brands, some of the B2B business was a bit slower than expected. And there were a number of public tenders not taking place for schools and offices, etc. So that was one part of it. And then gaming categories has gone very well, continuing to go well. Smart home has gone well. So the own brand business is has been developing more or less according to plans. So I feel quite confident with the Q3 and where we are and where we plan to be. Briefly.
Okay, very good. And then just one question for you, Rasmus.
Yeah.
On the relationship with Easy, what sort of exclusivity do you have? I mean, I've seen Tibber for one able to distribute their products. Are there others as well? And do you have any superior terms to others?
I think the name of the game is to be the best. In a short answer.
Thank you. Anyone else? Yeah. The mic is coming around.
Yes, hi, Mikael Övdahl, P-Fonder. So, is it possible to say how you're performing versus the market in this quarter? I mean, everyone is facing the same type of problems. Maybe the large ones are faring better than the smaller ones in this environment. But do you have any market data to look at?
Yeah, well, we are facing different competitors in different segments and with different business models. So the question is, have we lost market share or not? That's basically the question. Well, maybe if I ask Philip, what is your point of view of an answer to that? Because it's a complex question.
There we go. And we have Philip, the CFO of DIST IT, coming on with an answer.
Hello. Good question. But as Robert mentioned, we have different segments, different businesses. We have Septon, Aurora del Taco. They're exposed to different dynamics, but also customers and markets. We have going into sort of the own brands. We have gaming. We have electric vehicle charging. We have the cables and call it B2B business. And I would say we are not losing shelf space with our main customers. I think that's the conclusion we have internally.
Yeah.
So we keep our market share, but it's hard to sort of distinguish exactly the growth of our unit compared to markets because it's so scattered. But our internal conclusion is that we're not losing out on shelf space.
One more question for me. You're building inventory in the quarter. Why is that actually? I mean, I guess customers are, or everyone is screaming for certain type of products, at least, whereas there's a scarcity. So is it because you're not selling some product because others are missing to customers? For instance, in the gaming segment, I would assume that if there are no graphic cards or no PCs out there, you're not selling other type of gaming related products either. But and on the inventory then, do you expect a release already in Q4?
We have there are two things. One important thing going on in the spring season was that we saw that lead times were starting to prolong. And when they start to prolong, then usually that is a wave after wave start to hit. So we saw also price increases starting. So we were planning that what do we need for Q3? So we made forecasts. So we bought against what we plan to have a sort of business and to secure the supply chain of own brand goods. Because for us to have the goods for the high season in Q4, we made those, we placed those orders already in May for deliveries in December. And if you order now in China, now we are in October, it will take you 7 months or 8 months if you don't have placed binding forecast. So the supply chain situation is quite complicated. We did a similar turn last Q4, where we took a reservation bet, you can call it, on the market that we should stock up on own brand goods. And we saw that the market was drying up of supply of these categories. So we had a hell of a market and season. So because it takes a lot of capital to do what we have done. It's investment, which we believe is sound.
And you had a follow-up question as well, meaning, so how far do we believe that it will take us to see stock coming out from warehouse also?
Oh, we will see that in Q4.
Yeah.
I guess you're in a good position to gain market share because of this strength you have to actually been able to build this inventory ahead of high season.
Yes, I mean, you can say that in a situation of scarcity, the distributors with availability will be the winner.
I can come back.
Hej, Emil Ponnert from Ladsmart. Rasmus, I have a question for you, I believe. On impressive growth, 287% for the past year. Interesting, what is the composition? You said that between housing associations companies versus the private customers. But what is the most, which segment of these two is the most interesting, and why?
I think homeowners has been in charge of driving the transition. It's also been somewhat, if you look at the property owners and household associations, they're lacking the understanding for the need of charging in bigger parking spaces. Recently now we saw Stockholm City also talking about rolling out 50 to 100,000 chargers in Stockholm. I see both public charging and household associations and property owners to be the next wave. I think it's one of the most interesting areas to be looking at the moment.
I think that's good enough, thank you. Another question in terms of the international expansion. It goes a little bit to what ABG mentioned here. You say Denmark, Finland, Germany, that you plan to enter those markets. Something that has been a great advantage to you is the relationship, the partnership you have with Easy, and it's a great product, I understand. Will you have the same exclusivity on these new markets? Because I understand, at least in Denmark, maybe more countries, they're already there, Ease.
To clarify, I don't believe, I mean, we are one of the preferred partners to Easy, based upon the belief that we should be the best. And that's why we're working together with Easy since it was just an idea. I have the full support of moving into new markets throughout Europe. So I don't believe that should be an issue at all.
All right, thank you.
We have another question on the front row. Yeah.
Jörgen Dahlén, private investor. about these horrendous price increases you mentioned, Robert. What is your ability to pass on these price increases to your customers? How is your market strength in that respect?
It's very good, actually, because we cannot give the freight costs away, and the customers understand that, and it's a general trend in the market, and we don't, and those who don't do it will suffer really hard. So there is a good understanding. It was in the early days, in the first part, we were quite early with the increases. It took some time to convince the customers and explain to them what was going on, but then gradually they understand the dynamics.
This means that on net speaking, this will not lead to lower margins for you in the medium term.
We don't expect that at all. So we will see a recovery back to normal. And in the end, it will be the customers who will be paying for it.
A very simple question for clarity to Rasmus. By housing associations, you mean in Swedish bostadsrättsföreningar?
BRF, yes.
Thank you.
Perfect. Any more questions from the crowd as of yet? No? All right. So last was the competitive landscape you look into right now. How is it like? What is the dynamics of it? Can you take it through?
Yeah, well, I've been in the market for a long time, so I would say that I was a part of building the market. But today, it's a highly competitive market. I would say that our biggest competitor is actually the guys who delivers the fossil fuel and the petrol stations out there. So we're kind of fighting the petrol heads, trying to change their perspective on how to drive and how to be sustainable. Yeah.
So you're not fighting the nearest competitor, you're actually fighting the big ones.
Yeah, the big ones, I believe, is the key takeaways.
Yeah.
Yeah.
Okay. When we're talking about dynamics in the market, if you're talking about the nearest competitor, how do they look like compared to you? What is the difference between you and them?
Since this is a trend growing out of the Nordics, if we're looking at Norway, an example, the market for EV charging or the need for EV charging was moving so fast, so that if you're looking at the value chain, they just kind of jumped over a few steps. Whereas in Sweden, we had the opportunity to be both handling distribution through our partner installers, so acting as both as vendors and installers, which is a great and somewhat the foundation of EFUEL. This has helped us provide an installation service and also build up a strong sales throughout Sweden. And I would say the other ones on the market who do this is Rexel, Ahlsell, Selga, the old traditional distributors for electronics, electricity.
Yeah, go for it.
Follow up on that and the ecosystem. Do you foresee any of the actual manufacturers of boxes to also sort of move forward and offer the type of services that you do and payment and stuff like that? Or how do you see the market developing? And on that topic, and maybe that's not for you, but is it on the agenda for you to maybe even buy charge box manufacturers, or is that totally against your strategy?
I think we're hardware agnostic when it comes to that sense. I think it's an ever-changing landscape when it comes to the products, and I think also for the foreseeing next future, I would say that the EFUEL services, which more people will be moving into, we have a great advantage of having a customer relationship where we deliver the boxes, we can also deliver the services. I think it's hard to move into this landscape if you're only delivering services or only delivering boxes. And I think that's the sweet spot for us. We can have the control of the whole value chain.
I have one more question since you mentioned hardware. You talk a lot about own brands, and obviously that is very interesting in the EV charging segment. Could you elaborate on when and what you're planning to do there?
I can tell you more about that in the future, but we're not looking at developing charging boxes. We're looking at other categories around charging.
Fair enough. Thank you.
So there's quite a lot of questions in the future, Rasmus. Can you elaborate a little bit on EFUEL in 5 years?
Yeah, as I said,
What do you have in your head?
I mean, the goal is to
coming
be the leading company in Europe, and I think if you're looking at the market in Europe, we had the chance to be, or how should I say, we had an early mover advantage in Sweden, and I think moving out in Europe, we will also be having that early mover advantage, being an early player in an early market, making us a big player in a big market.
Right. I have to ask a question on the business dynamics. On the is there some sort of conflict between you or the company and while you go directly to the consumer, but you bring the installers on that journey? Is there an integrated conflict in that business dynamics?
I think we see a change in business models in general, and I think as long as you do it together with the partner installers and vendors, because we have to share the revenue together with them as well. But this is, I wouldn't say this is a conflict. We rather strive on providing the best service for the customer with a great customer journey.
Yeah. Right.
Hi, Eric from ABG again. So just on the growth target of 70 to 100%, which I believe is a bit higher than sort of the broad market. So I was just wondering if we could break that down a bit. Partly if it's some specific niche expected to grow that rate, and how much is coming from sort of geographical expansion versus
Nothing is
same
coming
market
from-
growth. Nothing.
No.
Okay, could you sort of break it down? Because I believe it's a bit above the market estimates that I've seen.
Sorry, I didn't hear the last.
It's a bit above the market estimates that I've seen, so I was just wondering where you're getting the 70 to 100% from.
That's the forecasted growth of the EV charging market, according to how the sales of EVs in Sweden look over the next coming years.
Okay, so it's specifically for Sweden.
Yeah.
Other questions? Okay. Yeah.
Yes, the geographic expansion, when it takes place, will that be done organically or through acquisitions?
Well, it will be done in the most suitable way.
Yeah.
But is it possible to do it organically, or do you need to?
Yes, it is.
Yeah, I think.
And it is possible to make it through acquisitions. And we will pursue the most suitable or efficient way.
Yeah, I think it's depending on the market as well. But
Yes.
we built a strong platform that makes us interesting to new markets, and I think it will suit both the market and us very well to offer that kind of service to the end consumer.
And I guess being a part of this, it makes it easier to do it organically than if you were,
of course,
to be alone.
Of course.
Go for it.
Just while I have the mic. On your long-term targets, what kind of gross margin do you need to move up to above 8% EBIT margin?
We've done quite careful calculations of the whole financial dynamic of that journey, and also the growth in exports for own brands, how the share of gross margin with other distributors in Europe should look like, and the capital dynamics. And we ended up at the 25% gross margin with a mix. Is that equation will yield 25% in gross margin, which will yield the 8%. Because it's also based on scalable growth with efficient base plates in these entities will give a more efficient EBIT efficient growth. So that's how it ends up. You should have a meeting with Philip so he can show you the financial model.
And in that 25%, how big share of own brands does that mean?
That means about 50%.
Where are we now?
Where are we? 25.
Yeah.
25.
All right. Do you have any more questions from the crowd for today? No? Awesome. That means that we must have prepared quite an elaborate presentation plan, though. So we basically want to thank everybody for attending here. Thank everybody for seeing this at home. We have a lot of conclusions, a lot of bright future looking ahead of us, let's say, would be one of the conclusions. And a lot of work within the EV charging segment to go home and keep grinding on. So again, once more, thank you guys for this, and thank you for joining.
Thank you all for coming.
Thank you for
Have
coming.
a great weekend.